Hi, today's Saturday, September 21st, 2024. I am Jason Shapiro with crowdedmarketreport.com. Today I was going to speak about a subject that I find sometimes people get a little bit pissed off at me because they think I'm like making fun of other people or putting people down. And that's really not what I think I'm trying to do. If anything, I'm making fun of myself, truthfully, because, one way that I think that I can hopefully help people in becoming better traders is to show them the mistakes that I have made in my career. I've been doing this for a long time, and I've had what I would consider sort of three sort of lives in trading. One was when I started, which was very typical of when many people start, with P&L going up and down and swinging all over the place. And then I went through a period of a number of years where I really tried to learn. And then the last 24, 25 years or so, I have been following sort of a process that I learned through trial and error in those other periods. Offering up mistakes that I have made is a way that I feel like I can help people, because I don't know how to teach people how to predict the future. Because quite frankly, I don't know how to predict the future. And if you can find someone that does and is willing to teach you that, please let me know. But what I can do is show mistakes I've made in the past so that hopefully people can recognize when they're in a certain stage of their trading career, they can recognize that maybe they're making the same mistakes that I said I have made. And it can help them to either prevent them from making those mistakes, or at least help them learn from the mistakes that they have made by seeing that other people have done the same. Look, we're all pretty much the same. At the end of the day, we all have the same psychological barriers and all that. And we all, as humans, end up making very similar mistakes. So why not learn from others people's mistakes as well? So the particular mistake I'm talking about here is a lot of what I'm seeing, and it's what I'm calling the angry bear scenario. I've seen a lot of that this week. There's a lot of sort of macro bears out there. And what I'm going to say is, in late 90s, I was bearish the U.S. stock market. And I had a million reasons why. I had just come out of business school. I knew everything. I had macro reasons why I believed in the bearish story. I had what I thought were contrarian reasons why I believed in the bearish story, and it wasn't working, and the market was going up, and I was fighting it. And I remember specifically Alan Greenspan came out one day and said he thought that the market was exhibiting some irrational exuberance, and the market went down that morning. And I was like, oh, you see, me and Alan Greenspan, we're the only ones who know. And the market was down for about 2 hours and closed up that day, just slowly kept going up and closed up that day. And I knew at that point that I was in a lot of trouble, which I was. But I was an angry bear. I would deny the fact that the market was going up. I didn't think that anybody knew what they were talking about. I didn't think the market knew what they were talking about. And I just kept getting angrier and angrier and angrier. And I can tell you it didn't end well. And anytime I've gotten into that situation of the angry bear, it has not ended well. It doesn't happen to me anymore because now I trade a processor and it won't allow me to do that. But I'm seeing a lot of that this week in particular after the whole Fed thing. There's been a lot of bearish arguments from these macro people. The Fed's cutting rates more than expected because they see something in the future that's, very recessionary. Recession's coming. The market tops on the first interest rate cut. The market tops when the yield curve goes from inverted to back to normal shaped, all these things. And these things may all be true, okay? But at the end of the day, the market's on an all-time high, okay? And this just makes these people angrier and angrier and angrier. This is just like I was in the late 90s. It doesn't end well, is what I'm trying to say. The angry bear scenario. And I've done videos in the past about shorting all-time highs. And look, all these arguments could be right, okay, in the end. But being short an all-time high is just plain silly. Let the market confirm what you're saying is right. And then, okay, you can think about shorting the market or something. But until then, it's silly. And what I notice about a lot of these things, because I see them on Twitter and I see them on YouTube, all these bearish arguments, is just because somebody says something day after day after day, doesn't mean that it's true. Okay. They just can keep saying it and keep saying it. We're going into a recession. We're going into recession. We're going into recession. Okay. That's great. It sounds very impressive. You're very adamant about that. You won't relent. Okay. But that don't make it true. Right. And I've been hearing people say we're going into recession now and people have seen on my videos, since the beginning of last year. We're going on almost 2 years now where we're getting this recession. And I'm not here to say it's not going to come, but what I'm here to say is just because someone keeps saying something again, and we see this in politics all the time, just because someone says it again and again and again, it doesn't make it any more true. It might make it more believable somehow, but it don't make it more true, right? And there's a saying, bears sound smart, bulls make money. And I believe that, it's all very interesting to hear these bearish arguments, right? And I think deep down, most people want to see, in a way, the market go down because they want to see the rich people get hurt, right? Especially people who are not fully invested in the stock market, which I would argue are most people at this point. They want to see the market go down because they're sick of watching other people get rich, or at least they think other people are getting rich. Well, they're not. So therefore they are attracted to this, what I call bear porn. And that's what it is, by the way. It's bear porn, right? And as an example, I did 2 videos about a year ago on the same day using the same data. And one of them, I did a bullish case scenario. And then the other one, I did a bearish case scenario. And I put them on YouTube like within 20 minutes of each other. And the bearish one got something like 6 times the amount of views that the bullish one did. Explain that to me. It's bear porn. People love it, right? It sounds super smart. It sounds super interesting. We're attracted to it. But like I say, bears sound smart. Bulls make money. And even in a crash, all right? Look at the 2008 crash. I knew some people that made a bunch of money short that 2008 crash. But none of them kept it. Because if you were bearish in 2008, then you were bearish in 2009, 2010, 2011, 2012. Nothing changed. At the time, when the government came in and did all this support, it was seen as very bearish. It was seen as inflationary. It was seen as a socialist type of activity. And that was all seen as very bearish. But what I'm saying is you made more money buying that crash, okay, or buying it the whole way down and just dollar cost averaging the whole way down. You made more money over time than you ever made trying to short it, right? And that's the idea. I know we all want to make money today and we all want to make money now, but ultimately what you want to do is make money over time in your lifetime so you can get your wealth can grow. And trust me when I tell you, you made more money buying the crash than you ever did shorting it. Now, could you have shorted it and made a bunch of money and then turned that around and bought that? Sure. But I don't know anyone who did that. I know plenty of people who lost money in the crash. I know plenty of people who made money shorting it in the crash, right? But again, I don't know a single person who made money shorting in the crash that didn't give all that money back because they stayed bearish and they stayed short, right? So think about that as well, all right? So that's really my idea here. Don't be an angry bear, right? And if you see these angry bears, which there are a lot of them out there right now, it seems to be getting louder and louder this week. It's a dangerous place to be. I've been there. It's never ended well. And I don't think it's going to end well for these angry bears now either. Okay. So that's my general thought and my general idea today. I hope that adds some value to your thought process. I hope it helps. If you like this video, please hit the like button. I'm always happy to hear questions and comments. Please check us out, crowdedmarketreport.com. We have a free Substack as well. We're on Twitter, the whole 9. Okay. Thank you. I hope everyone had a good week. I hope everyone has a good week next week, and we will talk again soon. Have a good one.